Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In today's episode, we're going to talk about the recent announcement that Binance made. That is, Binance will list Frax share FXS in the innovation zone, right? So basically, the announcement reads Binance will list Frax share FXS in the innovation zone and will open trading for FXS BTC and FXS BUSD trading pairs today. Users can now start depositing FXS in participation in preparation for trading, right? So what is Frax share? Frax is a fractional algorithmic stablecoin partially backed by collateral and partially stabilized algorithmically, right? So basically, if you guys take stable coins for any DeFi application or for any application in general, stable coins are basically either collateralized by crypto assets such as Ethereum or any ERC20 tokens for the DAI stable coin, or they are collateralized by real world dollars such as the one for USDC, which where every USDC is backed by a real US dollar in their account, or they could either be collateralized by assets or multiple other assets apart from just the US dollar itself in the case of USD Tether. So that's one category of stable coins, right? And the other category of stable coins is basically algorithmic stable coins, which don't really have any form of dollar or any collateral backing them, and they are purely like basing their stability on the performance on the algorithm itself, right? So Frax share aims to be a stable coin which is partly backed by collateral and partly backed by algorithmic stability, right? So the Frax share token FXS is a non-stable governance token of the Frax protocol that grants holders governance rights to add slash adjust collateral pools, set minting slash redemption fees, and to change the refresh rate of the collateralization ratio, right? So the key word to highlight here is it's a non-stable stable coin. What that means is a stable coin is usually expected to be stable because that's when its application as a stable coin comes into play, right? If the stable coin itself is not stable, then people can't really cash out or use the stable coin as an on ramp to purchase their cryptocurrencies, right? There are stable coins that are non-stable. Some of the classic examples are Ampleforth, which is one of the most famous stable coins that is not really a stable coin. You can also include dynamic set dollar or empty set dollar in that category. This is for the Ethereum network, and B dollar for Binance Smart Chain, right? So similarly, Frax share token is a non-stable stable coin, and it's also a governance token of the Frax protocol, right? That grant holders governance rights to adjust or add collateral pool. So by holding FXS token, you are able to participate in the governance where people who hold FXS tokens are able to add or adjust a collateral pool for the 50% collateral that this token has, and set minting and redemption fees, which is also something that you can do with this token, and to change the refresh rate of the collateralization ratio, right? So you have three important features that you are awarded with if you are a holder of this token. And basically they go on to talk about how risky the innovation zone is and how you should be very careful when you're investing in tokens that are mentioned in the innovation zone, right? So let's go into the Binance research page for FXS token. So it's basically a fractional algorithmic stablecoin. That's pretty much the overall statement. And if you see, since its listing, it has gone up to 14.76%, $14.76 per coin, and it's gone up 98.59% in the current day, which is incredibly high. So its peg is pretty much like broken at this point, and there are consequences if it goes above the $1 peg or if it goes below the $1 peg, right? It aims to be at the $1 mark, but if it gets so much demand, the token price shoots up and the stable coin is not really stable anymore, and therefore there is either some form of an incentive for people to sell their FXS tokens and to bring the price of the token below to the $1 mark, right? So Frax is a fractional algorithmic stablecoin, partially backed by collateral and partially stabilized algorithmically, which we discussed already. The ratio of the collateralization and algorithmic depends on the market price of the Frax stablecoin. If Frax is trading at above $1, the protocol decreases the collateralization ratio. If Frax is trading at under $1, the protocol increases the collateralization ratio. So basically, similar to Ampleforth, there is a mechanism to incentivize people to sell tokens if the price of FXS token is above $1, right? And this mechanism is basically that if the price of Frax token is above $1, they decrease the collateralization ratio. So the collateralization ratio when the price of FXS is at $1 is basically 50%, right? Because remember that this token is partially backed by collateral and partially not backed by collateral, and it's backed by algorithm, right? So if the price is above $1, the collateralization ratio of 50% gets decreased, which means you don't really have to hold the collateral in order for you to hold this token. So the collateralization ratio is decreased, which is an incentive for people to not collateralize their asset anymore, right? And this collateral asset is going to be any form of ERC20 token, because this is based on the Ethereum blockchain, and this itself is an ERC20 token. If Frax is trading under $1, the protocol increases the collateralization ratio, which means you would have to add more collateral in order to make sure that you don't get liquidated or you don't in any way get affected by the protocol, right? So FXS is the Frax share, is a non-stable ERC20 governance token of Frax with the following use cases: governance, grants holders governance rights to add or adjust collateral pools, set minting/redemption fees, and to change the refresh rate of the collateralization ratio. Again, pretty straightforward. We already discussed this before. Staking in various pools to earn interest with preferred APY. Again, this is one of the major selling features of this particular token, right? You can hold this token and you can stake it on their pools and get some really good interest rates, right? We'll cover that pretty soon. Minting and redeeming. FXS will be burnt when minting Frax and minted when redeeming Frax. So Frax is going to be like FXS tokens will be burnt when they mint the Frax token. So Frax is different than FXS, and when they mint and minted when redeeming FXS. So when you redeem FXS, when you redeem Frax, the FXS token would be minted, but when you burn FXS, then you will be minting Frax. I hope I made myself clear here, because it is quite confusing. But let me read this out one final time so that we are on the same page, right? So FXS will be burned when minting Frax. So there are two coins, FXS and Frax. So when you mint Frax, you will burn FXS, and when the vice versa is also true, and FXS would be minted when redeeming Frax, right? So that's the mechanism of how this protocol works. It is quite confusing, but again, bear in mind that this is an algorithmic stablecoin, so there are aspects to it that will make it much more appealing to people when it's either above or below $1, right? Rewards, FXS rewards will be claimable for users who deposit Uniswap liquidity pool tokens to incentivized pairs, right? So again, if you have FXS token, and you have another token, either ETH or any other other token that they have the liquidity provider incentive rewards that they plan to offer. You have to provide liquidity for Frax and some other ERC20 token, and by providing liquidity, you can earn some rewards by depositing them in their website, right? So that's pretty cool. At Genesis, Frax is 100% collateralized, meaning that minting Frax only requires placing collateral into the minting contract, right? So again, initially at Genesis, the Frax is the protocol is 100% collateralized, meaning that minting Frax only requires placing collateral into the minting contract, right? During the fractional phase, minting Frax requires placing the appropriate ratio of collateralization and burning the ratio of FXS. Again, this may be quite confusing to many people. Again, I myself was confused multiple times when I read this today morning, but after I continuously read it multiple times, I was able to like slowly grasp what's the whole idea, right? But again, if you guys feel like it's still not making sense to you, I recommend you guys to go to Binance research page and look into Frax shares or FXS token, and you'll be able to read through this at your own time and at your own pace. As of February 18th, the total supply of FXS is 100 million, and the current circulating supply is 5.34%. Again, just like any other unstable stable coins, there's no real technically limit to the amount of FXS that can be injected into the market. So that's pretty typical of that. So bear that in mind, right? So when we look at the website where you can read through all of their docs to understand what this token is, frax.finance is the place where you will find their project, and this is basically where you will find their white paper, the documents, their audit report, and everything else, right? Frax is the world's first fractional algorithmic stablecoin, right? The Frax protocol introduced the world to the concept of a cryptocurrency being partially backed by collateral and partially stabilized algorithmically, right? So it's a pretty straightforward concept. It's one of the first of its kind. A lot of people are not exposed to unstable stable coins, and a very tiny fraction of who are exposed to those unstable stable coins will be the ones who will be exposed to Frax, because not a lot of common folks don't know about this, right? And since this project, just like many other innovative projects that are being built on the Ethereum blockchain, this project also suffers from the fact that if Ethereum gets clogged, no retail investor who's planning to invest a small amount of money would be exposed to these kind of tokens, right? So this is probably only suitable for people who have a high net worth, or people who are really going hard on their degen and trying to yield farm, or trying to put their money onto very high risk projects like Ample Fourth or Frax token or empty set dollar or whatever, to get very high returns, right? Again, this project sounds amazing, but I personally wouldn't use this because again, it's super high risk. I consider myself as an investor, a brutal investor, right? And I'm looking for long-term predictable gains, not some short-term degen gains. But if you are into high-risk investment, this project may be for you, right? So if you go to the trading app, you'll be able to see the price, and you'll be able to see several parameters for weekly, and for weekly prices you can change the timeline to all time or 6 months or a year or whatever, right? The collateralization ratio is also mentioned here as 87.25%. Since the price of Frax token is very high, the collateralization ratio is decreased and the growth rate is 6.34%. So there's a lot of information that's given here, and you can use several collaterals, and again you can go through their website to learn more about this. I personally didn't really look too deep into this project because as I said, I'm not really planning to invest in this. and I won't really recommend any normal retail investor to invest in this, because this is a very high risk project, right? There are high risk projects which I have invested, but unstable stable coins are really like the riskiest of the riskiest, right? So if you look at the option in the top left, you can see three lines, which if you click, you'll be able to see their options. You can obviously link your MetaMask wallet, add the slippage, put the minimum and maximum amounts. You can go to the dashboard. You can mint Frax, and you'll be given the collateral pool that you can include. You can include USDC as a collateral as of now, not any other ERC20 tokens, but I'm pretty sure that new ERC20 tokens will be added to this list soon. You can redeem, which is a really good way to, if you play around, you'll be able to understand this project even better, right? Buyback and recollateralization staking, which is what I believe most of the people will be interested in. So you can stake the Frax USDC liquidity pool tokens that you received from Uniswap, but by providing liquidity to that pair, and you can deposit here to earn an APY of 268.39% per annum, which is relatively high, but not as high as many other projects, right? You can also pretty much get a pretty good overview of how the performance is, and several other indicators that will help you make a better investment decision, right? So that's pretty cool. And if you scroll below, you can see the governance aspect of it, which I believe that they have had several governance proposals. List Frax on Uniswap, it's closed. Balancing collateral strategy, move Uniswap Frax USD rewards to Curve, so on and so forth, right? Currently, farming pool with Apollo protocol is the current active proposal. If you do hold FXS tokens and if you want to participate in this ecosystem, this is basically the place for you to go, right? Integrations, you can clearly see that it's integrated with Binance as of today. Yearn.finance, SushiSwap, MXC, Gate.io, Uniswap, and I'm not really sure. Matcha, okay, Matcha is what it is. Okay, I was thinking for something else, but anyway, informational content, you can get information about this from CoinMarketCap and CoinGecko, Blockfolio, DBank, which is a wallet, external farms and DeFi. Again, you can get it from all of these locations. Anyway, so these are basically some of the features of their website that will help you participate in this ecosystem and get some really good staking rewards if you're into this, right? Let's go to the CoinGecko page for Frax Share FXS tokens. It's currently trading at $14.49. Again, way above its $1 peg. It's up 93.6%, which is crazy. You can see that it's currently the 311th ranked token by market cap on CoinGecko, and you can also get its contract address if you want to, if you're not sure which address to use on Uniswap. You can copy it from CoinGecko, and you can use the right address, because there's a lot of scams out there. The market cap is $75.1 million as of today. Despite the Binance listing, the market cap hasn't really crossed the $100 million. So it's kind of like, not a micro cap, but it's also not a mid cap, right? So it's somewhere like a low cap, like small cap kind of token. Again, a lot of room to grow. So the maximum supply as of now is 99 million tokens. Again, with unstable stable coins, you can clearly expect the maximum supply to not really last very long, because as a point where they want to increase people's participation, they'll kind of change add some proposals and change the maximum limit to whatever, right? But again, I wouldn't really worry about that, because it's something that you don't really have to worry about when it comes to unstable stablecoin protocols like this one. So let's look at the chart and see the overall performance of this token price wise. So if you see the chart, you're basically in for a surprise. The reason is this token had been above $1 for numerous times, and the all-time high seems to be at $28.12, which is way too higher from its $1 peg. Again, it seems like so many people have already pretty much used the token for its for their full advantage and have literally dumped this token. And people who bought it at the dump are probably like waiting for the token price to go up. It seems to be going up after the Binance listing, but I don't think it's anywhere near the $25 or $28 range, which although like there is a high chance that this will potentially cross that mark, I personally wouldn't buy it at these levels, right? If you are planning to buy this token, I suggest you to wait till you get a very decent pullback. Based on the spikes, you can clearly see that it has very violent uptrends and similarly violent downtrends, right? So again, don't be the guy who buys the token at this level, right? Wait patiently if you want to buy this token. Again, I would personally not recommend anyone who's not really well experienced with this protocol, and anyone who's not really understanding the algorithmic stablecoin system to invest in this token. But if you do want to invest in this token, I suggest you to wait till you get a decent pullback, because it's basically going parabolic, right? So I would suggest you to wait till you get a very decent pullback. So that's pretty much the dollar value for this. If you look at the Bitcoin comparative, you can clearly see a similar trend where the Bitcoin comparative is following basically the dollar comparative, and it's pretty much shooting up as well. If you want to invest some bitcoins in this, some Bitcoin Satoshis or a spare Bitcoin or two in this protocol, I would not recommend you to do this at this stage, because it could pretty much crash anytime, right? There have been several, ups and downs and pretty sharp peaks. You can clearly see from this protocol. I wouldn't really trust this protocol at this stage. It's pretty violent, it's pretty unstable, and it's very hard to understand for many people, right? So if you are to plan to invest in this token, I would suggest you to do in-depth thorough research, understand their protocol first. You can go to Binance research to look into their, like, do a preliminary analysis, but I would suggest you to read their white paper and look at the trends and see how this token has been performing overall, and try to understand the ecosystem first if you're willing to pay high gas fees and get into this protocol, right? I personally wouldn't, but if you want to do it, you are at, you have to do your own research, right? If you look at the markets, you can get it from Uniswap, Binance, SushiSwap, and Gate.io. You can also get it from other markets, but I don't want to go beyond the top 5. So again, Binance pretty much has a lot of liquidity, Uniswap as well, and SushiSwap as well. So those are the three places where I would get this token if you want to get this token. If you want to get it at a cheaper cost, Binance would be the best option, right? Again, what are my final thoughts on this? I personally would not recommend this token to anyone. I personally would not even buy this token myself. It's a very risky project, especially if you're a newbie or if you're trying to understand the cryptocurrency market. I don't want you to have a bad taste in your mouth. So you can probably, if you want to really participate in the ecosystem and try to test the waters, I would probably suggest you to not invest more than a few $100 or $100 max, right? Depending on your your portfolio size and all that. Again, you will be paying equally high amounts of gas fees to participate in the ecosystem, so you're pretty much going to lose right from start, right? But if you do want to participate, again, I would suggest you to do your own research, go through their information page. They have a lot of information on their website. You can read through everything and understand it before you put any of your money. I personally wouldn't do this, and I personally wouldn't recommend anyone doing this as well, right? Remember guys, you guys are not regular investors, but you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please click the like button and subscribe for more videos. See you in my next video. Bye.